Hey guys, welcome. Good morning. How you all doing? Welcome to a Monday Morning Matters with me, Kalu Aja. These are like our 30 to 1 hour show where we are just talking about the key things that we're going to focus on this week for your economy, for your portfolio, of course, for you as an investor to get through the week, right? That's what we're doing today. So this week, essentially, there's just one big story in the world economically, and of course, it's the war happening right now in the Middle East. The U.S., Israel, Iran, and of looking to draw in maybe all the players in the Middle East, the Gulf Corporation, that the whole Gulf, everyone there. This looking like it's going to be might draw them in if it doesn't end pretty soon, but that's the main economic story today. So just talk around it and see what the impact is going to be for Nigeria, for the world, and for you as an investor, right? All right, so fantastic. I'm not able to get YouTube going, but I do have the slides available on Twitter. So I'm just gonna try to share a few slides. Of course, I like this way because you can always go back and look at them and see what we're talking about at your own free time. So the main thing, apart from the war in the Middle East, I want to talk about today really is going to be inflation in Nigeria. The MPC, the Monetary Policy Committee, met um, last week, and they met to essentially reduce the MPR in Nigeria, right? So MPR went to 26.5%. That's the monetary policy rate. And if you don't know what the monetary policy rate is, the MPR is, look at it this way: the central bank is like a bank, and then if you are a commercial bank, essentially, if you want to borrow money, let's say you want to discount, you need money really, really quick, you go to the Central Bank of Nigeria and you can borrow from the Central Bank of Nigeria. The rate that they'll give you is that MPR. And just make it very simple, right? That rate is now 26.5. So what that means for you is that you cannot lend anything below 26.5 because you are borrowing at your best borrower. The best lender for you is 26.5. So you are going to lend at 26.5 plus. So essentially, the Central Bank of Nigeria wants to fight inflation and wants to make money expensive. It raises the MPR. So money becomes expensive, so you can't get money and all that. Same way, the Central Bank of Nigeria wants to make uh, money cheaper to expand the economy. It brings down the MPR. So what we've done today is that they've reduced the MPR just by 50 basis points to 26.5%. Not a lot, not a lot, right? So because it wasn't that, should we say, groundbreaking, because inflation in Nigeria has gone down significantly. Apologies. Nigerian inflation has gone down significantly. So I think the market was expecting a bigger MPR reduction from 26.5. So the market didn't really react really in big terms to this movement by the Central Bank of Nigeria. We had already priced in a fall in the MPR. So this fall to 26.5 was not that material. The market sort of shrugged it off. Nothing major is going to happen. You're not going to see banks suddenly reduce interest rates because MPR has gone to 6.5. If inflation has gone to 15, then we expect that the central bank should do much, much more with the MPR, but they haven't done that, right? So because of that, the market is basically saying, hey, we're just going to do a holding pattern for now till we see something more material from you guys. And that's essentially what they've done. Rates are not going to fall that much. When I mean rates, lending rates. So if you go to your bank tomorrow and you're trying to borrow money, you're not really going to see any major change in that. It's still going to be almost the same. For the central bank to reduce interest rates to SMEs, it's got to bring MPR down significantly. But the problem and the risk with that is that if you bring MPR down, you make money cheaper. Folks would buy money, naira, and then go chase foreign currencies or go do speculative activities. So that's what the CBN is battling with. Should you make MPR very, very cheap, which means credit becomes available, and with that credit, people can create jobs in SMEs, yes, but also people can also go out and start to buy other stuff that they want to buy, and that would push inflation up. So that's what the CBN is fighting with on those two fronts. And for now, who is winning is the guys that are basically saying let's keep the what's it called the MPR elevated for now, and we gradually roll that down. So what's the implication for MPR staying high? Like I said, SMEs will not get cheaper loans, and we fight inflation better. Again, remember, inflation in Nigeria is not driven really by monetary means alone, but also by supply issue, especially lack of food, But this which brings us to our second point we want to make on the show today. Food inflation in Nigeria fell, of course, last week to about 8%, about 8 points, below 9%. It's a big, steep fall. We were at about 26% food inflation last year. Now we're at below 9%. So it's a massive fall in terms of food prices coming down, which should be, of course, celebrated. The problem is this, right? Inflation in Nigeria has come down for food, but it has gone up for what we call services. So if you look at healthcare, education, those costs have gone up. Why? Because there's inflation, prices have gone up. So if you are if you own the school in Nigeria, you increase your prices. If you own the hospital in Nigeria, you increase your prices, right? Because there's inflation in Nigeria. So why is food coming down, right? And then other stuff are going up. Because most of the food has come to Nigeria to reduce inflation has been imported. It's not organic production from Nigeria. So the inflation rate has come down to 9 because we have flooded the market in with imported food, which is good in the short term. In the short term, it's good to import the food, bring down the inflation rate, grab your arms around it, and then increase supply of food, because it's going to be the supply of food that's going to really be the key factor for us going forward. If we don't increase the price of food, right? If we don't increase the supply of local food, then inflation can really not come down. So if you look at the slide I've shared on Twitter, I'm sharing it for you, a nice slide from ProShare, inflation across the regions in Nigeria, just to buttress my point. If you look at inflation across Nigeria, where is inflation falling in Nigeria? It's falling in the southeast and the south-south. So the southeast and the south-south, you see that the fall in their headline inflation has been more pronounced. Southeast, for instance, was about 18%, not about 16% if you compare December and January. Same thing, south-south, they're about 15.2, they're about 15.6 now. So it's almost south-south-southeast, away from really most of the quote-unquote internal conflict. I've seen a fall in inflation. Look at food inflation as well. If you look at on Twitter, you see the slide I've shared. Look at food inflation. You can see that the southeast, right? If you compare again, you're comparing December to January. Southeast in December, food inflation was about 9.4 for southeast in December 2025. In January 2026, food inflation has come down to 4.3 in the southeast, right? 4.3 in the southeast. That's also fallen in the southwest, also falling in the south-south. But as you start to go to the north, food prices start to go up. Northwest has gone up from 9.1 to 9.8. Northeast, it fell, but it's still between 10 and 10. But look at the north central, where you have Benue, the food basket of the Federation, you have Kogi, you have Kwara, that north central axis. It has gone from 10 to 13%. So what we're seeing is not really an inflation number, but an insecurity number. Because farmers cannot farm, they can't produce the food, so the cost of food in these areas that traditionally have cheaper food has gone up. So again, look at what I'm telling you. Abia State, for instance, is having cheaper food than Benue State. It doesn't work that way, because those guys are called the food basket for a reason. They manufacture the food, but right now you can see the food is really expensive there because farmers are not going to the farm, which goes back to our inflation numbers we talked earlier about. That inflation in Nigeria is coming down, that's headline inflation is coming down, but food prices have also come down, but services, health, education, those are going up, because that is still, we've only brought that inflation by importing food, which is good in the short term, but the long term might not be in our best interest. So how do we solve this? The army has to go in, guys. This is no longer a monetary or finance issue. The military has got to go in to secure these food growing areas. So farmers can go back to farm. We can get the supply of food. Remember our definition of inflation in secondary school. Too much money chasing too few goods. So how do you fix inflation? You either reduce money supply, which is what the CBN has done, right, over the years by taking MPR to about 27 and bringing it down, or you increase the supply of food. You've got to do one of them. You really can't just do one. You've got to also increase the supply of food. So that's the point about inflation. So now, guys, let's go into the Iran US issue and talk around it, because we want to state what's going on, and then from there then say what's going to happen, let's say, to your portfolio and things like that, right? So I'm sharing some very, very nice visuals for you on Twitter. If you look at what I've shared on Twitter, you would see the Iran, the Middle East, and all that. There's a place there called the Strait of Hormuz, and that's why we're talking about Iran. That's why Iran is in the news and all that. Why is Iran important? Because Iran not just imports crude oil, not just exports crude oil, but Iran controls or borders the Strait of Hormuz. That choke point has Bahrain, Qatar, UAE, Iran, Iraq, Kuwait, all in that choke point. When these guys manufacture oil, including Saudi Arabia, they've got to pass through that Strait of Hormuz. Just a very, very tiny corridor. So if you shut that down, you are shutting down, give or take, about 20% of the crude oil that the world needs. So it's good to see the visuals. If you go on Twitter, try to look at the visuals, because that will give you a better sense of what I'm talking about. You would see not just the countries, the straits. You'd also see the volume of crude oil passing through the straits, right? So essentially, anything that affects that choke point affects the price of crude oil. That's why this war is kind of important, because if Iran is able to use missiles to stop ships going to pick up oil and export oil, that becomes a big deal. Look at Saudi Arabia. Look at the visual I'm sharing. Saudi Arabia has the pace on the Persian Gulf, and it's also near the on the other side. It also has the body of water that leads all the way to the Red Sea through the Suez Canal. But Saudi has no pipeline on the other side. All their ships dock on the Persian Gulf side. So Saudi oil, Kuwaiti oil, Iraqi oil, Iranian oil, Qatar, Bahrain, everyone, not just oil and gas, have got to pass through the Straits of Hormuz. That choke point there makes it an issue. If you stop oil going through there, you then stop the flow of crude oil. So that we know. But why is that important? Let's look at who gets its oil, or who gets its oil from these countries that are affected in the Strait of Hormuz. So if you look at the next slide again, you will see that the bulk of the guys that get their oil from the Middle East are Asian nations. Literally, Iran right now is under sanctions. So Iran can't sell oil the way Nigeria sells oil. Iran is under sanctions. So about 80 to 90% of the crude oil from Iran goes to China. 80 to 90% goes to China. Because of this, if Iranian oil cannot flow, China will have an energy crisis, right? Because they now can't get as much oil as they needed. Remember, they've already cut off the oil in Venezuela. Now they're cutting off the oil from Iran. That's going to be a drop in China's import. I think China imports about 13% of its oil from Iran. That's good. That's major. If you take away 10% of anything, that's major. Who else? India. So look at India, look at China, look at South Korea, look at Japan. All these guys get their oil directly from countries that export and sell to them, that pass through the Strait of Hormuz. So if you look at the markets in the Asia, they're all reacting to this news, because Nigeria is in a unique situation where in West Africa, Venezuela is in all way in Americas, America is in Americas, Canada is in Americas, Indonesia is in Asia, but away from all this. So any country that's exposed to getting oil from Iran, from Qatar, from Kuwait, Iran, UAE, and Saudi Arabia is going to be in big trouble, because if that strait closes, then when it's a bit of a bother, right? And you can see those nations there. That's the point. That's why it's big news. Not because if China can no longer sell cheap goods, then inflation goes up in Africa, because we get most of our goods from China. Same with India. If India has to pay more for power, then the cost of goods, the cost of drugs, the cost of fertilizer, cost of grain will also go up. Your rice in Nigeria is going to go up. Your drugs from Ghana, from India is going to go up, because they are paying more for energy to make those same goods. That's why it's a global story. That's why it's an investor story. You've got to be aware of this and say, okay, this might happen. Again, we're not talking about the war, just the effect of the war or what's going to happen if this continues more than a week or two. So that's the story, really. Is the Strait of Hormuz, is the Middle Eastern countries having just one access point to sell oil. If you look at the map that I shared earlier, you see that Saudi Arabia is also trying to build a different pipeline that will take the oil from the Persian Gulf and allow it to export oil via the Suez Canal all the way to the Mediterranean. So that's basically what they're trying to work on right now. So again, I just shared that infographic as well. You would see that's from the EIA. You see the risk factor there. So of course, if you are following, you then say, wow, this presents a golden opportunity to Nigeria because Nigeria is not affected by the Strait of Hormuz, right? We're an oil producing nation. We have all this oil and we're able to now take advantage of that. But before we go there, let's talk about the market reaction to what we just said, because we've said that China, India, South Korea, Japan are, should we say, exposed to the Gulf of Hormuz. That's the risk that they have. So if you look at this, the futures market right now, right? Look at the futures market right now. Anything to do with risk is down. All the stocks are down. Nasdaq is down, S&P is down, Russell is down, that's small caps is down. Gold is up. Gold is up big time, about 2.36%. Natural gas is up. Crude oil is up about $71. That's WTI. So these things are all up. So anything that you're going to put money in that you cannot guarantee where you're going to get tomorrow, which is stocks, is down. Anything that you're going to get a guaranteed return, which is like bonds, is up. US bonds, ironically, are going to be up because that's the safest investment in the world. So US bonds are up, while stocks, US stocks, are down, which is further going to be a damper on them. But crude oil, defense are going well. So again, look, if you look at it on Twitter, you should to see the what I'm sharing, and you should see the pictures there to show crude oil, natural gas, and gold down, and of course the S&P. What am I saying? Crude oil, natural gas, and gold are up, and then the stocks, the variable income securities, are down. How does that play again into the global market? I just pulled this chart off CNBC today because Asia is open. So if we look at what Asia is doing, we can see where we're going to be in the markets in the coming week. Airline stocks are down. Why are airline stocks down? Because they use energy, and energy is now at risk, right? So airline stocks, they use energy. They have to buy energy in advance. So futures are up, so they're going to pay more. So stocks are down. Energy and defense stocks are up. They are gaining because of higher crude prices. So Mobil, Chevron, all that kind of stuff, they are going up in price. Your airlines, your Delta, your Cathay Pacific, that kind of stuff is going down in price. US futures are also dropping again. Investors are seeking safety. So gold, US 10-year bonds, those kind of assets are going to go up in price, but stocks and the rest are going to go down in price. If you look at Bitcoin, also struggling because Bitcoin is more or less attached to Nasdaq. So it looks at the volatility index. It's not really a store of value. People are looking at it and saying, this is too risky. I'm going to just go to gold or to silver or something that can have the value after all this is over. So again, the markets are reacting because Asia is going to be hit more than any other part of the country. US might actually gain because US can export crude oil and take over markets. Again, should this continue? We don't expect this to continue for a while, but should this continue, the US can export oil. Not just the US, Venezuela as well can also export oil, and Venezuela is under the US sphere of influence now. So it's a big advantage in that avenue. China used to get its crude oil from Venezuela, from Iran, and from Russia. The US, whether it's by design, has shut down two of them, Iran and Venezuela. When I mean shut down, they were buying discounted oil from those countries because of the sanctions. So they can buy discounted oil and they can reduce their cost of production. So the stuff you're buying from China is actually enjoying a sanctions discount. China can go to Russia, Iran, and Venezuela and buy oil, not at the price you see on the screen, but at a way cheaper price. And that's the problem. So now that the Venezuela is now under the US, They are selling oil to China, but at market prices. Same thing with Iran. If this pans out and this regime falls, then China's costs are going to go up. So that's material for you, for the world, for everyone that's going to be trading in China. Remember, what does China do? Goods. What does India do? Drugs, fertilizer, grain. So you can't escape it. Even if there's a disruption for African economies, we're going to basically feel this because we buy lots of stuff from India and from China, not from the West. So we're really going to be in a bit of a bother. Let's end this by talking about Nigeria. So what's the end game for Nigeria now? What's going to really be Nigeria's gain or loss or whatever? Now, if you're a Nigerian, you've clearly seen that we're not in the Gulf of Hormuz, so we have a big advantage. We can export now. We can make so much money in Nigeria. But this is a problem. People look at the oil price in Nigeria, but don't look at the volumes that we're selling in Nigeria. I'm looking at the chart. I'm going to share it now on Twitter. If you look at this chart, in 2013, and this was not the highest, in 2013, Nigeria was doing about 2.2 million barrels a day. 2013, not too far ago, 2013. That's when, of course, the richest Nigerians have ever been in their lives is 2014. And that's when oil was about 2.2 million barrels a day that we're exporting, right? So we've gone from that 2.2, we fell to about 1.4, we had all the men issues and all that. We've gone up a bit to 2 million barrels in 2020, but now we're falling down. I mean, 2023, oil output has just crashed to below even 1.2. Right now, where our budget went from about 2 million barrels, which is unrealistic, to about 1.7, which is more realistic, but we're still not at 1.7. OPEC quota for Nigeria is 1.5. I think Nigeria is just meeting its OPEC quota as we speak, right? About 1.6. So again, look at the chart. I think this other one is May 2025. Yeah, I mean, look at the chart. We are still struggling at the levels that we were in 2024, which is 1.5, 1.6, 1.7. So if oil prices do go up, which is supposed to be a positive for Nigeria because we're selling more crude oil, we're not pumping the volumes that are going to give us that extra cash. Yes, we will make more dollars per barrel sold, but not taking advantage of the excess demand, because we just talked about the Gulf of Hormuz restricting supply. Where would Europe run to for supply? Countries like Nigeria, like Angola, that's what they'll run to. But we can't take advantage because we're pumping about 1.7, 1.8 at max, right? That's a problem, number one. Number two, Nigeria has forward sold its cargo. Nigeria forward sold its cargo, which means that we took monies in 2020, 2021, 2022, 2023, I think 2023, I believe. We took money from international traders. They gave us dollars and then we're giving them crude oil today. So it's a forward sales agreement where we take money from them and then of course we then give them crude. So what that means is this. Dangote, for instance, there's something in the law that says that when Nigeria has oil, we have to give the local refineries first before we sell. It's in the Petroleum Industry Act, but we can't do that because we've sold about 213 barrels. Let me get the exact number. About 14% of Nigeria's crude oil production in 2025 just went to servicing these forward loans. This is the volume now, not the dollars. So we've taken the money. And we're now giving these guys crude oil. What do we use the money to do? We use the money to repair our refinery. Yeah, I know. You have to believe me when I say this. So in short, we wasted the money because we took the money, fixed in quote the Port Harcourt refinery is not working now, and now we have to sell the Port Harcourt refinery. But the money has already been taken. So Nigeria is giving these guys crude oil, and we have no refinery that was fixed for the crude oil that we gave. It's almost a double or triple whammy for Nigeria. So the lack of oil output, and even the oil output that we're getting, about 14% is going towards this forward sales agreement. It's a big disincentive for Nigeria to take advantage of this rise in prices today. So we're not going to make money, but would have made 10 times what we're making if we had no obligations and we just took our output to just stay 2 million barrels. Right now, we're just surviving, really, really, because the naira should be way, way, way stronger than it is today. Because if the oil prices are going to go up and Nigeria is not impacted, then of course we're going to be a big, big, big focus. We should get more investments, more output. Naira is stronger, FDI flowing in, but we're not getting that because we've not set our house in order in the process to take advantage of this. So that's the big problem in Nigeria, that this is going to happen, and if we're not careful, we'll actually pay more because Nigeria is importing crude oil and also importing PMS. So we import crude oil for Dangote refinery, we import PMS, the guys are importing PMS to sell locally. So we're exposed to the import side and we're not taking advantage of the export side. Again, guys, just giving you data. It's not, well, I'm not arguing with you, just giving you data, right? So let's see how it pans out. So it's still early days for now. And again, I don't know if anyone has a question. If you guys have a question, we'll call today. It's still early days, but the whole thing I've said today really depends on how long this fight ends. If this fight ends by next week, then we're good. Africa is good, Nigeria is good. Would have had a bit of, to be a road bump. That's okay. Cost maybe went up, but they're going to contain themselves. If this thing goes on into like a month, you're going to see the effect literally in the pumps in Nigeria, because once the oil, the gas you're using now has already been paid for. The gas you're going to use tomorrow and next week has already been paid for. It's going to be the gas that we're going to replace next week and the other week that has not been paid for, that will be bought at the higher prices. So again, this all depends on how long this fighting takes place. If this fight is over by next week, we're fine. If this drags on, the economy in Africa, Nigeria, is going to be affected, I would say, negatively in a bit, because we have that exposure to imported energy. The largest economies in Africa are all net energy importers. South Africa, Kenya, Ethiopia, even Egypt, they are all exposed to imports of energy. But the countries like Nigeria, that are supposed to be the largest economies, are supposed to be the largest export earners of energy, are exposed because they are importers of crude oil and PMS. That's the situation right now, guys. All right, let me see if I can add. Wafo has a question. I'll add him, and then Wafo, it says I can't add you. Sorry. Oh, can you speak now? Wafo, if you can speak, go for it. Otherwise, I mean, there's nothing to say. We might have a space today, I think. I'll talk around it, but that's about it. Wifo, let me see if I can add you. Let me go to a few messages. Yeah, your chart is showing 2025, not 2026. Yeah, I'm showing 2025 daily output for crude oil last year. That's what I'm showing. 2025 plus 2013 to 2024. I'm showing you where we were in the past, right? I'm showing that in 2013, Nigeria was doing about 2 million barrels per day. Right now, we're doing about 1.6, 1.5, and even that 1.6, 1.5, we are giving some back as collateral for loans that we've taken. So even that 1.6, if you reduce what we've taken out, is very, very little. That's why the president is saying this, is all these deductions, he's still mad at it. That's why he's basically saying we are spending so much on deductions. He wants to see what NNPC is making. You can't blame the president, you know. You have an oil company, you are doing 1.4 million barrels a day. You look at the accounts, they are bringing in nothing. This is what's going on in Nigeria. It's because of these deductions and all these payments for subsidy, payments for forward sales, payments for Frontier that has really made NNPC just an ATM. You've got to really take hold of it and correct that. But for now, if this goes on for more than a week, 2 weeks, we'll be in some issues. But if this ends in a week, I think Nigeria and Africa will be in the clear, but not before then. Yes, I see your point. Can you clarify the forward sales agreement? Did Nigeria took? Let me read your Nigeria took. Yeah. So just to emphasize, the forward sales agreement is this: Nigeria took loans. We took a loan from many folks, right? And the collateral we gave was our crude oil. So they gave us dollar cash today. We basically said, we're going to sell you oil over 10 years, over 5 years. Give us the money for the next 5 years. Give it to us today. So we took the money for the next 5 years today. then we are supplying them crude. So yes, it's supposed to be a back-to-back arrangement whereby this money we have still gotten it in 5 years. But look at the problem. Dangote is now functional in Nigeria. If Dangote can get Nigerian crude, then Dangote can refine Nigerian crude cheaper, your PMS will be cheaper. Because even if we give Dangote a subsidy or we don't give him a subsidy, he's refining Nigerian crude. He's adding value to Nigerian crude. The money is staying in Nigeria. He's not refining abroad. He's not importing crude. Even if we give him a subsidy, it's a subsidy for local consumption and manufacturing in Nigeria. But when we do the forward sales, from the 1.7 what Nigeria is making, we are giving about 15% to this guy. We're giving them raw crude to repay us for the loans they've given to us. So because of this, that's why Dangote cannot get crude in Nigeria. There's no crude for him. Hence, he has to go out and import crude oil to refine in his refinery. That's the problem. So we're not saying there's no crude. That's the point. So Dangote and the rest have got to import crude. And again, look at the other flip side. We're also importing finished products, PMS, into Nigeria, which we sell locally. So the PMS you're going to use today, next week, maybe 2 weeks' time, has already been paid for. Markets are in futures. They've already paid for them. They're on the high sea. They are coming. What happens to PMS that we're going to pay for from today? Because PMS price in the world has gone up. And the PMS price you use locally, there's no more subsidy. Remember, there's no more subsidy. So the PMS price you pay locally is going to be passed on to you as a cost. The government will not take it. So the government will have no deficit, but you would have the inflation. That's what subsidy removal means. If there was subsidy, the government would have a deficit and you would have cheap PMS. But now there's no more subsidy, so the government will not have a deficit, but you would have the inflation. If there's inflation in Nigeria, it will change it again, the fall in inflation that we've been witnessing to start to go back up again. Because now PMS will now come into the mix and make cost of goods go back up. Remember what I talked about at the very beginning. Inflation in Nigeria is falling. Food inflation has fallen from 26% last year to about below 9%. Massive fall. But other inflationary issues, education, healthcare, service, what we call services inflation, they're up. So what's that telling? That's telling that the inflation rate in Nigeria has come down because we have imported food. But the services which are local, like you are teaching, you have a house, it's not imported. Your teachers are local. That has gone up because those are local costs here in Nigeria. That's what's happening. So that's the point about the forward sales. Forward sales reduce our flexibility. It reduces our ability to make money from this increase in prices. Because when we sell this increase in price, I see your question. If we sell at a higher price, yes, Nigeria gets that money. We pay our debts faster with the forward sales guys. So let's say the deal was about $60 per barrel. If we sell at 70, we are able to pay them faster. They don't take the profit. We take the profit. We're able to pay them off faster and they go. But we are still giving them the volume. We can't say, for instance, that, China wants more oil. We're going to stop this arrangement and give you the oil. We can't say that. These guys have locked in deliveries from Nigeria till we pay off that loan. So it's not just the money, it's the delivery. So when they get this delivery at 60 or at 70, it's more important for them to get the product than the price. Because even at 70, they can sell at a premium because China, South Korea, Japan are facing the Gulf of Hormuz issues that Nigeria is not facing. You see how it's playing out. We should have had an advantage, but now we don't have that advantage. It's not bad. I mean, what is bad for me is that we took the money and we fixed, in quotes, Port Harcourt refinery, which has not been fixed. That's the problem. We wasted the money. These loans that people should be answering to EFCC today what they did with the money for the forward sales. EFCC should have not a big EFCC panel. Well, how much did you borrow? Where did the money go to? It didn't go to Port Harcourt refinery because it's not working. Where did the money go to, and then who should pay? That's really it. All right, guys, fantastic. Let's see if we can do a space later today. I would say on Monday. Maybe we'll talk more about this. Have it on YouTube as well. Do it again. I think it should be fine. But apart from that, that's Monday Money Matters. Thanks for tuning in, guys. It is wonderful. Like I said, it's we're playing a game of time. Let's see how long this takes place. Long is not good. Short is good. Long is not good at all for portfolios, for Nigeria, for Africa, even for the world. If this continues for more than a week, we're in serious trouble. All right, folks, have a good one, and I'll see you guys today or next week again. All right, take care. Bye bye.